May profits be upon you. Welcome to another weekly market forecast. We're looking at gold. All right. We're looking at the gold CFD. All right. I personally trade gold futures, but reaching out to my viewers, there's more people trading the CFDs as opposed to gold futures. But I would highly suggest you go to gold futures because the industry, the it's regulated by the Chicago Mercantile Exchange. Everybody gets the same price. When they look at the charts of gold futures, everybody gets the same price, same spread, same this, that. Everything is standardized, as opposed to CFDs. And depending on the broker, you might get a crazy spread. You might get some slippage, ridiculous slippage, and you know, and people get different prices. Between CFDs, between the brokers. So, anyway, off my soapbox. Let's go. This is a bullish market. I'm telling you now, I am bullish in this market. There's no reason to be looking for shorts. You might say, oh, we're so overextended. Yeah, it's going to come down at some point, but it doesn't necessarily have to happen now. That's what I'm saying. All right. Look at the year that between look between 2009, is it? Actually, it's 2008 and 2011. It just kept going. People say, "Oh, we're overextended. We're overextended. We're overextended." Here, all the way up here, and then it goes to the sideways for years, right? And then, how many people were saying we were over? This was an overextended market here, 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 and it just keeps going. Just don't look for that. Don't try to predict. Just react. All right. It's bullish. The order flow is bullish. Look at the news. All right. If you just want to you know consider the fundamentals, I didn't mean to hit that. You can see that investors have piled into both gold and silver in a year that has seen a reshuffling of global trade, a threat to Federal Reserve independence, and a weakening of U.S. dollar. Silver is hot too. I mean, just ridiculously hot. And gold is up 39% since 2025. I mean, come on. This is the best year since it's had since 1979. All right, just go with it. That's all. All right, that's all I'm saying. Now, as far as the technicals are concerned, what I want you to notice is that these impulsive moves up, this one notwithstanding, this one went high, went low, but it went low first and then popped up, pulled back. All right, it's the impulsive moves and their corrections are to the upside. All right, look at this long period of sideways consolidation, right? What I want you to notice is that when we finally broke that consolidation high here, uh, price didn't just wick above that, and come back into the consolidation. It closed well above that, and inside of each of these big impulsive candles is on the lower time frames, bullish fair value gaps, and that goes to the order flow. All right, it's just telling you this bullish order flow, and that's all you need to consider. Right, this break above is a bullish break of market structure here, and that's something that you want to see that confirms and what do you call validates the uptrend. Right. If you go down to the weekly, what you will see is a long period of consolidation here. Then we finally get our breakout with bullish fair value gaps. Look at that. One there. Let's do this right. All right. And then you get another one here. All right. And then you get another one. Stop it. Here. All right. And this month I mean, this week, last week, closed above the previous high, the previous range high of the previous week, which also closed above the high of the week prior to that. All right, this is indicating that the next candle to form will likely trade towards that high. This becomes um, my draw on liquidity. You understand? Okay, so you can see and you can see that price has been so bullish, it hasn't even come back to touch these. It goes up, it doesn't even come back to touch this. The fair value gaps it leaves behind. It's just continuing to expand higher. All right, now you might say, "Ooh, it looks like the candles are getting shorter, and because we're overextended, we might see price turn over." Not so fast, not so fast. You see those small candles there? How big? How big did these? How big did these look? Huh? How big did those look? And it just kept going higher. After a period of consolidation, price just kept creeping on up. Period of consolidation, small candles creeping on up. Little small period of consolidation, up. These are small candles. These are just saying, hey man, there's no reason to take shorts. That's all, right? If we go to the daily, you can see how those small candles get even smaller, but you can see how they are steady and consistently pushing higher. Okay, and I also want you to see that I can get rid of that. You can see that even on a smaller scale, price is doing the right thing. It's coming. You see the bullish fair value gap here. Price did come back in there, fill bullish fair value gap, and push higher. Now things get a little different here. All right, as we have a bullish fair value gap there, price came down and closed below that fair value gap, and it failed. All right, but what did it bounce from? Let's move over here. See these opposing candles? Those are so important. All right, when they go in the opposite way of the order flow, those are going to be your areas of support. All right, when I see a fair value gap fail like this one, I'm wondering, my attention immediately goes down to the opposing candles, and price found support there, and you can see how it launched here. And I want you to also notice that if I can move this, there is a break here. All right. Friday's candle closed well above the high of Thursday. All right. And we're heading towards the draw on liquidity up here. Now, what I want you to see, what I want you to realize is that inside of this bullish candle is some bullish fair value gaps that price could use to pull back to and to go higher from. Right. And on a small, that's on a lower time frames. If you look at this candle and how price closed so strongly above that, leaving very little wick, it's a bullish indication. All right. And I want you to see that there is on a lower time frame, this is a break of market structure here. All right. If we go down to the 4 hour, I want you to see. Why do I keep saying I want you to see? What we can see here is this break here. All right. This is the market structure shift. If I can just mark it there, market structure shift. Why? All right. We see price break the high here, real strong. All right, leaving a fair value gap. Price comes back into that fair value gap and closes even higher. This is a bullish indication. You look for a pullback into this leg of structure. Price does pull back into that leg of structure. Get rid of some of those lines. All right, you see it a pull back into the fair value gap here, into these sell the buy wicks here, which is on a lower time frame, an order block, an area of demand, if you will, and you see that reaction here, and we go higher and we take out the high, establish a new high, right? What happens after that? Price shoots down. This is the top. This is our new swing high. Price shoots down, closes below, pulls back up, closes below. This was the higher high, higher low, lower low, lower low, lower high, lower low, and we come down. Price kept this low protected, all right, because what that's a pretty strong low. Why? Because it broke structure. It led to a break of structure. So this is a pretty strong low. Price comes back to test that low, holds there, goes sideways, and then we move up higher, taking out this swing high. Now, this is an internal high. This is the actual swing high for the 4-hour swing high. This is an internal high, all right, because it's inside of this leg of structure. All right, it's in between the high and the swing high and the swing low. That's why what makes it internal. And price did close strong above that, which is a bullish indication. So where are we going? Probably higher. The likelihood is that we're going higher because this represents a shift from bearish to bullish momentum. Okay, and we also have that swing high, that internal high here, intersecting this bullish fair value gap on the 4-hour. I'd like to see that. I like to see that because that's usually a confluence of support. So if price does move higher, pulls back into this, I'm looking for this to hold. I'm looking for this to hold. Now, bear in mind, be mindful. We have relative equal lows here. All right, this is a strong draw on liquidity. So price could very well come on back down there if it you know, if it seems fit to do so. All right, if it wants to do that, it can. All right, I didn't put my relative equal low sign there. Okay, so I'm going to keep an eye out for that, but I do like this market structure shift. I am bullish in this market, even if it comes down to break this low. I'm still looking at the market going higher. All right, I would think it would take the sell side liquidity here. All right, depending on how it closes. If it closes through like it gives a candle body close below that low, then I'll be thinking we'll probably go lower, probably to test the fair value gap here and test this opposing low here. All right. But that's if it comes to that, okay. But I think we're probably going to go higher before we do that. Okay. I hope you enjoyed this video, and make sure you hit the like button, the boost button, and watch out for the videos that are coming out behind this. I'm going to do silver next, and then I'll likely do the US dollar index. So make sure you check those out. I will see you in the next video. Thank you for watching.